morning, everybody. This is Fred Meissner with the weekly technical market call for the Fred Report for October 27th, 2011. Obviously, a very interesting day going on today. We'll get right into it here in terms of the markets. The main thing is it sure does look like the market wants to go up. We're getting some resolution on this Greek business that's been the real problem, they say, and we still remain positive. And note that with bears at 37.9, there's still a fair amount of fuel left in this market. Now, that said, these sort of giant gap-up opens very often are retraced. There's now a nice big gap at the resistance at 1250, which is the former resistance, which is now support. I don't think the market will make it down there if it's strong. I think we probably won't go much below 1260, and I do think we've got a shot at challenging the highs. There's also a fair amount of short interest out there. When Jeff Garbaz comes on, I'm going to ask him to comment just a little bit about the amount of short interest to give you guys a flavor of what it is, because one of the research providers we work with is very, very good at short interest. But there's plenty of shorts. There's a lot of people that simply are not in this market because they're either waiting for a pullback or don't believe the Greek thing is going to be resolved or whatnot. But I talk to an awful lot of people, and most of those people are not in the market. And there's the chance that we have performance chasing going into the end of the year here, which means this market could really go. Now, I'm going to give you guys some resistance areas that are very interesting because they are not resistance areas on the S&P, but they are where the market can likely stop. Resistance is 78 on the Russell on IWM. It is 168 on MDY and 8,000 on the New York Composite. NYA they're all resistance areas. That's all, when you look at weekly charts, you'll see we broke right down out of those tops. We can come back and test those tops and still theoretically go down from there, and the market should stop at those points. It may not stop for very long because I think things are still looking pretty good. My accumulation models, everything remains positive in spite of this. We've got some overbought readings, but we've seen the market go up when it's overbought before, and my guess is that's what certainly can happen here. And I would be much more worried about performance chasing and missing up move than I would be in terms of buying something and having it come down after I bought it. Let's talk about the bonds for a little bit because they're interesting, and there's a couple of interesting points on bonds here. First of all, the TLT is giving ground. It's broken down below 114. You know, we did try to get the bounce this week that we thought we would get. So far, it's not working, i.e., so far, if we close in here, it'll be the low close for the week. I will say the accumulation models and such on TLT continue to look better than I think they should relative to the drop that we're having, but they're still not positive. I can still see TLT at 105 to 100 or, say, 105 to 108. One other interesting point, though, and that is a number of people bought the HYG with me when the market was bottoming down around 80. Low on that was 78, and obviously the yield is really nice, but we're right up at resistance at 91.50 on that thing, and it's very volatile. A switch you could make would be to sell HYG and buy PHB, which is a less volatile but high yield junk bond fund. The difference is that fund actually, they weight the companies by fundamental rating, so unlike HYG, which has a higher weighting the more bonds you issue, these companies may be a little more stable. The volatility is much less, though, and that might be a way to participate in high yield but dampen the volatility of your portfolios a little bit. In terms of gold and silver, I like the looks of GLD here. I'm maintaining my 210 and 10 months target on GLD. The measuring implication right now on gold for this move is 176 short term on GLD. It's at 168 now, and then we'll have to see, but I think this market can continue to go. And the other interesting market here for us is crude oil. The USO has got resistance right in here at 35.36. Assuming that we get through here, I think it can go to 39 to 40, and that will help XLE and some of the energy stocks and such we've been recommending. And with that, I would say I still am overweighting energy and tech. Those indexes look good. Consumer discretionary, XLY, also looks good. And I think, as I say, I think we're going to see higher prices into the end of the year. With that, I'm going to open the call for a minute to Jeff Garbaz, and then we'll do some stocks for you. Jeff, would you comment on short interest first before you start asking me questions?
Sure, no problem. So as Fred mentioned, we also do some work with Phil Erlanger, who does good work on short interest.